We'll bring her to you as soon as we can. In the meantime, Brian Madden, your thoughts on this sector. Are you invested in the on behalf of clients in the auto or auto parts sector?
No, Paul, we're not. There's a few ways to invest in it in Canada. Obviously, we don't have any tier one OEMs here, but we do have a number of tier one parts suppliers, Magna and Linamar is chief among them. We did own Magna for a time, but parted ways with it in, I believe, February or March of 2022. We hold both of these companies in high regard, but let's make no mistake, these are cyclical companies. So, you want to be here for a good time, not a long time, and you want to be owning them when the cycle is going in their favor, which it is not at the moment. But both companies are controlling the controllables and doing their best amidst headwinds that are cross-cutting the whole sector.
Okay, we are joined now by Linamar's Executive Chair, Linda Hasenfratz. Linda, thank you very much for joining us. I know it's a busy time for you. We want, of course, to get your view on the tariff situation, and we'll get there. You made some very strong comments yesterday on the Linamar conference call. But first of all, let's talk about the quarter and the year that are now in the books. It was a challenging year, particularly in Europe, and we can talk about that. How did your team execute in that difficult environment?
Yeah, absolutely. It was a tough year in the sense that all three of our core markets, automotive, agriculture, and access, were all down in 2024. Regardless of that, however, I'm really pleased to say that we did see double-digit earnings growth. So our team executed fantastically, whether it was increasing market share, which we certainly did, or reducing costs, which our teams are fantastic at. We delivered double-digit earnings growth. It's the 10th time in the last 15 years that we have delivered double-digit earnings growth. So I think that's pretty good in terms of consistent, sustainable growth. You might want to rethink your investment strategy there.
How did your team control costs? Where do you look to control costs?
Yeah, this is something that Linamar has long been a huge advocate of, and that is around lean manufacturing, supply chain management. We go out in our plants every single day to look for opportunities to reduce cost and streamline how we're doing things, and every single day we find something. It is something I'm personally very involved in. I work very closely with my plants to help identify those opportunities and bring some of those learnings that I'm seeing at other plants around the world to them to help reduce costs. So, this is something we are very, very good at. Frankly, it's something the automotive industry is quite good at. It is sort of par for the course that automotive suppliers tend to be highly efficient organizations.
Linda, I take your point that you're navigating a challenging environment very well and commendably surpassed $10 billion in sales for the first time, quite a milestone. And your press release notes that you increased content per vehicle in North America by 15%. I was wondering if you could elaborate on exactly how you're doing that. Are you dislocating other suppliers on key OEM platforms, or is it simply a mix shift in favor of OEM platforms where you have incumbency?
Yeah, it's a combination of all of the above. So certainly we are winning work away from competitors. Unfortunately, there is distress in the supply base right now, I would say notably in Europe, but also in North America, with suppliers that perhaps got a little too far out over their skis on EV programs, kind of bet the farm on that. And obviously there's been a big dial back there. We've always had a very balanced approach to pursue product for every type of vehicle propulsion and tool it up on flexible equipment so we can shift things around. So we've been able to manage much more strongly through this time frame. So we are winning work from distressed suppliers. In fact, we've won about $180 million worth of work from distressed suppliers over the last 6 to 9 months, and are continuing to quote, frankly, hundreds of millions of dollars of work here in North America, but also I would say strongly in Europe as well. At the same time, we're winning new programs for new platforms that are launching, a variety of hybrid, internal combustion, some EV as well that we are launching here in North America, in Canada, in the US, in Mexico. So we've got launches going on in all those places. All of that is growing our content per vehicle here in North America.
Okay, you had plenty to say yesterday on the conference call about the U.S. tariff situation. There was news on that situation yesterday, of course, with a 1-month reprieve to the North American auto sector, to the Canadian and Mexican auto sectors. What is Linamar's latest thinking on the threat that these tariffs pose to the industry and to the company?
I mean, obviously, we're quite happy to see that a reprieve has been given to the auto industry in terms of tariffs. Hopefully, this is not just a 30-day stay, but a long-term approach to an industry that is very highly integrated. I think it's no secret, and there's been plenty of folks talking about the fact that the industry is very, very integrated. Some folks say you can't unscramble the eggs because after, free trade since 1965 between Canada and the U.S. in the auto industry, we've managed to build something that is incredibly strong, incredibly efficient in terms of maximizing volumes in different companies in all 3 countries. So we're making higher volumes of product. We're focusing on those products, bringing new technologies and innovation to the table, and building better cars for better costs with better technology. And to try and sort of rip that apart would be very destructive. And it's not entirely clear that the end game would be a positive one, because if we all decide we're going to build our own vehicles and all the parts for our own vehicles in our own countries, the cost of doing such in the U.S., in Mexico, and Canada would be enormous. The required investment would be enormous with really no payback, because you're not going to be building better or more efficient cars. So I think instead we should be focusing on how do we get even more efficient? How do we collaborate more between our 3 countries so that we can take advantage of a global market that frankly is much bigger outside of North America than it is within it. But North America is only 20% of the world's global vehicle volumes. I mean, don't we want some of that 80%? Like, let's figure out how we can do more together and sell more together to the rest of the world.
Okay, and you also said, and I think a lot of Canadians would be interested in this and would appreciate the thought that Linamar is not contemplating moving facilities to the United States because of the tariff threat, to avoid tariffs.
Exactly. When we look at important long-term decisions like where are we going to locate a manufacturing plant, we look at long-term fundamentals. Where's the talent? Who has the skills that we need? Where's the supply base we need? What are the costs in the different regions that we're in? What's the proximity to the customer? Those are long-term fundamentals. You do not make a decision on something as important as long-term as where you're going to locate a plant and make an investment to make a plant on something that, as we have seen in the last 24 hours, can be implemented and taken away, inside of 24 or 48 hours. You don't make long-term decisions on short-term tactics.
Linda Hasenfratz, thank you very much for joining us this morning. She is the executive chair of Linamar, one of Canada's big players in the auto parts sector. Still ahead, today's market drivers with Bloomberg's Divya Balji, and retail is one thing she's focused on with Macy's, as one of many retailers reporting results today. And our phone lines are now open. Brian Madden, ready to take your questions on large cap stocks. Call us with 1-855-326-6266 or email us at firstcall@bellmedia.ca.